Hi everyone, thanks for tuning in. Today's video is going to be pretty raw. I'm just going to get right to the point. Prop firms are holding you back. They are making you fail as a trader, literally, and they are completely distorting the reality of what it means to be a trader, profiting in the financial markets. Now, this is coming from someone who's actually made a lot of money with prop firms. I'm not saying there's not opportunity there, but the fact of the matter is they all have malicious intent, and it only seems to be getting worse, which is what's prompted me to make this video. Now, I'm not just talking out of my ass here. I have friends in the industry. I know the inner workings of a lot of these prop firms, and I'm just sick and tired of seeing how they operate. So I'm going to expose some things today. I'm going to talk about my experience as well, and hopefully I shift somebody's mindset away from prop firms and towards a real solution, which I'm going to provide in this video as well. And no, it's not a paid solution. It's not a boot camp or some course or some shit like that. I'm just going to tell you what the solution is and just hope that somebody implements it. So I'm actually just out running some errands right now. I'm going to pull over and give you guys a talk. I've been doing this for a long time. I've been trading for over 7 years now. And that means I was trading at a time where prop firms weren't really popular. They weren't really a thing. They were just getting started, but nobody trusted them. Mostly because they were just so new, but also they seemed too good to be true. So what myself and other traders around that time did was open personal brokerage accounts and fund those accounts with our own money. That's kind of how it's always been. That's like normal trading. We didn't just spend a few $100s and have access to a $100,000 or $200,000 fake account. And so that meant when we'd lose money, it was actually our money to lose. We had skin in the game. And because of that harsh reality, we didn't just gamble away the dollars in our accounts. We had to be smart about it. We had to take good trades and we had to compound those balances until it was actually something meaningful. We didn't get to just start over and buy a new account. Back then, the way I funded my account was through the profits of my company. I had a residential carpentry business at the time. I was a carpenter for about 10 years and I did residential trim work. And so I would funnel a lot of that money into my trading accounts as I was learning and growing as a trader. And honestly, looking at the trading space now, at least from the perspective of social media like YouTube and Instagram and whatnot, the real successful traders who have been around for a long time, they all kind of started in that era before prop firms were a thing, and they all became really successful by actually using their own money and funding and compounding their own accounts. I can honestly only think of one trader who's been wildly successful with prop firms. I'm not going to name names, but I've met the guy. He's a great guy, and his skills as a trader are insane. But the reality is he's like 0.0000001% of traders in the entire world. All of you guys watching this, you're not going to achieve those kinds of results. If you do, it would be a miracle. I hope you do. But realistically, that dude and the few others like him are an extremely rare breed. I'd like to explain some of the reasons why prop firms are making you fail as a trader. Number one, they're giving you unrealistic expectations. I think everybody knows this deep down, but it's not realistic to make 10% profit every month. I mean, this should be obvious. The biggest hedge funds and investors in the world are happy with like 7 to 10% annually. To expect that consistently on a monthly basis is just absurd. Now, it's possible, it's certainly possible, but it is difficult. And to kind of piggyback on that point, prop firms have also instilled this false sense of reality into traders that it's normal to be withdrawing every single month. I haven't met a single profitable trader who withdraws from their trading account every single month. The majority of traders are withdrawing on a quarterly or bi-quarterly or annual basis. And the reason for that is actually quite simple. Not every month is going to be profitable. So how can you expect to do consistent monthly withdrawals? One month you could be break even. The next month you could be losing. The next month you could make up for those 2 bad months. And then the month after that, you could make significant profit that sets the standard for that account for the year. So if you expect to be withdrawing on a monthly basis, you're setting this false expectation for yourself. And when you don't meet that expectation, you're going to feel like a failed trader. When in reality, you're trying to accomplish one of the hardest things in the world. Now, another way that prop firms are ruining you as a trader is with the ridiculous rules that they implement. Not only this, but they seem to change those rules every other week. So it's nearly impossible to keep up with these firms. Even if you are a disciplined, safe trader, you still somehow violate these rules. So the way that these firms, the way that the challenge phases and even the live funded account phases are structured is literally designed to make you feel like a failure. You could spend 2 months of your life passing a phase 1 and phase 2 of a prop firm challenge account, finally get funded, and then make one simple mistake, break one of their rules, and lose everything. And then all of a sudden, you feel like the last 2 or 3 months of your life were just completely wasted. All that mental effort, all that mental energy that you put towards passing that challenge and finally getting funded after all this time has just completely gone to waste. Now, I've been through this many, many times because I've been trading with prop firms for a long time. I've always treated them as like a secondary thing because I've always had my personal capital as well. But honestly, that doesn't make it any less frustrating. Like, I've been funded so many times and lost that funding due to the prop firm shutting down. That's happened to me like 4 times now, I think. Like, I only go for 200K challenges too. So this is not small amounts of money to purchase these challenges. It's like a couple $1,000s Canadian every time. And then I'll pass phase one, pass phase two, get funded, start working up some profit, and then the prop firm goes under. That happened multiple times to me over the past few years. And that brings me to my most recent experience with prop firms. Many of you know, just a short while ago, there was like this CME outage, and it caused huge spikes in multiple different markets. One of them being gold, which is what I predominantly trade. So I had a limit order set on gold with a prop firm. I'm not even going to name names. That's not the point of this video. But I had a limit order set, only risking 1% of my capital. It was a very modest trade. The stop loss was set in place. The take profit was set in place. The entry was there. And while I was sleeping, this massive disruption in the market occurred. And instead of a $2,000 loss, which would have been 1% of my $200,000 account, I instead received a negative $15,000 loss. Now, I know that these prop firms don't actually control the market. I know that that was an unforeseen event and it's not their fault. However, how they handle the situation is entirely their fault. Now, one of the interesting things is that aside from my live funded 200K account with this firm, I also was simultaneously running a $200,000 challenge with the same firm. So 200,000 funded, 200,000 in the challenge phase. The challenge account didn't experience a loss at all. For some reason, the trade was just eliminated. Yet on my live account, the one that matters, I had a $15,000 loss, which obviously violated the daily drawdown limitations for this firm, and I lost the entire account. I reached out to them multiple times, trying to calmly explain the situation and expressing my frustration for how unfair it was, because they were not willing to reinstate the account. Now, a challenge account, I understand if that were to be failed, like, they get the fee, whatever, that's obviously beneficial for them. The more people that fail, the more money they get. But a live funded account, to just reinstate it wouldn't have cost them anything. And maybe I sound bitter when I'm describing this, but I mean, at the end of the day, I don't need that account. I don't need the money that I would have generated from that account. It's a small drop in the ocean, but it's more so the principle of it that really frustrates me. Because while this $15,000 loss occurred on this one firm, I also have multiple other accounts with different prop firms, and each one of them experienced completely different results from this CME outage. And of course, all my live accounts, like my personal funds, were completely fine. No issues there whatsoever. So some of these prop firms in just a short period of time, literally within minutes, made millions and millions and millions of dollars. And they didn't make it right by anybody. And to be honest, this was like the straw that broke the camel's back, because I've just been through so many issues with prop firms over the years. Like I said, firms shutting down, me losing my funding for reasons that were no fault of my own. And this is just another one. It's not like I was risking an insane amount of money. I was literally doing 1% of my account. It was even the swing style account with lower leverage and the ability to trade through news events and hold through weekends and stuff like that. And they still just absolutely screwed me on it. But this isn't a pity party. Don't feel sorry for me, because I could care less about that account. Doesn't make a difference in my life. What frustrates me really, other than the principle of things, is seeing how many other traders were affected by this. And not just this event, but all the things that have happened over the years. Seeing how many traders, especially beginners who are just getting their feet in the water when it comes to the trading space, seeing them get absolutely screwed and discouraged from trading altogether is very frustrating. And it sucks. It just sucks. Now, I promise you, I'm going to present you with a solution by the end of this video, so stay tuned for that. But I wanted to touch on a couple more things. I mentioned at the beginning of this video, I have some friends in the space, a couple friends in particular who have started their own prop firms. And as usual, I'm not going to name names, but one of my good friends who started a prop firm decided to shut down that prop firm. And he was telling me the reasoning behind that decision. And he basically said, after spending some time running the business and getting to know the space a bit more, he realized the only way to succeed was to be immoral. The only way to truly be prosperous in that business is to screw other people. And he said he had to close it down because he couldn't feel good about doing that. In order for the business to be truly successful, he had to come up with reasons to not pay out profitable traders. He had to only pay the small payouts from traders who just got lucky. He had to find a reason to violate and ban people that were truly successful, skilled traders. And so he straight up said, I can't do it, bro. So he shut down the entire business, which I really respect. But it just goes to show, like, a lot of these other prop firms who have been around for years, some over a decade, the majority of their money obviously comes from challenge fees and failed traders. You steal from Peter to pay Paul. That's how the payouts are made. The vast majority of these firms are not A-booking traders. They're not using their data to place their own positions in the market. They're just banking off of your challenge fees. And with the rate of how many people fail challenges, they're able to take those fees and pay out some traders, just enough to keep the operations running, just enough to make their business seem legitimate. But in reality, it's a very predatory business and it is not moral. Now, I know what a lot of you are thinking right now. You're probably resonating with a lot of the things that I'm saying, and deep down, I'm sure you knew most of this to be true anyways, but the problem remains that you think you can't fund your own account because you don't have enough money to do so. You think that paying a couple $100s to gain access to 6 figures of simulated money is somehow better than slowly growing your own account over time. And I completely understand that. I get it. It's very appealing to think you're a multi-6-figure trader and you have access to all of this capital. But the reality is it is simulated funds. You're trading demo accounts. It's not real. And with the very strict limitations that they give you, you're not actually trading a $100,000 account. It's much, much less than that. So my point is, it's a myth. If people did it before prop firms, then they can still certainly do it now. Even if you only have a few $100s to your name and you don't have a very high income, there is still a way to do it. It just requires more patience. But in the end, it's going to make you more successful. So I'm going to just run into the store, run some errands. I've been sitting in this car for too long, but I will come back and give you all a real solution to this. And then I'm going to actually demonstrate it for you as well when I get back home to my office. And I honestly think by the end of this video, you're going to completely shift your mindset and finally get out of this endless loop of failing challenges and spending your hard-earned money on new challenges. You're finally going to break out of that and start doing what real traders do. Because I've said it before and I'll say it again, prop firm trading is not real trading. But on the bright side, their bullshit rules have probably toughened you up so much by now. Your skin is probably so thick that when you start actually trading, it's going to be a lot easier. Stick around to the end of the video. I'm going to show you what I'm talking about. Just running around doing some Christmas shopping. Had to stop at Starbucks. I'm usually not a fan of Starbucks, but caramel brulee latte, come on. Oh my God. So listen, I said I would give you a solution to the issues I was talking about earlier. Well, here it is. It's a very simple 2-step solution. Step 1, open a personal brokerage account. Step 2, compound it over time. Very straightforward, right? But unfortunately, the majority of you are not going to have the patience to do it. You might not be convinced yet, but I promise you when I get back home and I show you this demonstration of how even a small balance can compound significantly over time, I think you're going to get what I'm trying to say. But seriously, guys, it's not normal to expect to make withdrawals every month. It's totally fine to just leave profit in the account and let it compound. Obviously, you have to pay yourself every once in a while, but the thing is, trading should not be your main source of income unless you have such substantial capital that you can actually sustain your lifestyle from trading alone. But very few can do that. Even I'm not at a level where I'm comfortable doing that just yet. I think I would need to be trading with like 7 figures to be actually comfortable just living off of trading income. And I'm not there yet. Prop firms have this weird way of conditioning you to think that you can be a full-time trader making monthly withdrawals, getting these monthly payouts. You can quit your job and live this dream life. It's just not that simple. The money I make from trading years ago, I couldn't even fathom this. And still, I'm not fully comfortable just trading. I have multiple sources of income, from being a content creator to having affiliate income to having an online business, all of that on top of trading. It's wonderful. And honestly, there are days where I wish I didn't sell my carpentry business and I wish I was still doing that. I think it's always kind of going to be a part of me because I love working with my hands and building shit. But also, you're a better trader when you're doing other things. Like when you're not hyper focused on the charts and what's going on a daily basis, your results tend to be a lot better and more consistent because you're not micromanaging things. But anyways, I digress. I want you to treat your trading account like an investment portfolio. Say, for example, you're dollar cost averaging into the S&P 500 over the course of multiple years or multiple decades, ideally. You're not going to be on the S&P 500 chart every day, micromanaging the small, minute movements. No, you're going to leave it there. You're going to let your money grow over time, and someday it'll all pay off. So trading isn't that extreme. You don't need to leave it in your account for decades. Obviously, we want to get paid and withdraw profits from our efforts in the market. But if you adopt that investor mentality, you'll look at things a lot differently. Let's say, for example, you're risking 1% per trade and you have a $10,000 balance. You could make 10% in a month, and that's only $1,000 profit. And then if you withdraw that $1,000, then you're back at square one. You're back at $10,000. You have to make another 10% every month, basically, if you want to withdraw that $1,000 consistently. That's obviously unrealistic. And to be quite honest, $10,000 is nothing when it comes to trading. But if you leave that $10,000 in there, make that 10% one month, for example, and then another 5% the next month, then 2% the next month, maybe you have a break-even month after that or a losing month. But each one of those months, you're depositing, for example, another $200 or $300 on top of your initial balance while compounding trading profits into that. My goodness, guys, in a few months, in a few years, you're going to have an account that can sustain your lifestyle. It seems daunting at first, but it's really not. This is how I started, and this is how so many other people that have been trading as long as I have started, back before prop firms were popular. We would funnel our own money into our trading accounts, trade profitably, hopefully, and as those profits compounded, we would also add more deposits on top of it until it became a substantial enough balance that we could comfortably make withdrawals from. That's how it goes. Now, I've had this long-term mindset for quite some time, but even more so recently because I stepped away from manually executing trades and I've been relying on algo trading. The less I look at the charts, the less I look at the day-to-day performance of this EA, the less I actually think about it, the more peaceful my life is. I have less stress. I'm thinking about long-term goals. I'm thinking about other things that I want to do with my day, like just playing guitar all day, for example, or making content. I do enjoy making content sometimes too. And I have the freedom to focus on all of these things because I'm just letting the EA do its job. Anyways, I'm going to pop into this last store here and then I'll head home, get into my office, and I'm going to show you guys a life-changing, mind-altering demonstration of how compounding really works. Stay tuned, you're not going to want to miss it. You know, it occurred to me as I'm driving home, I don't really give you guys many call to actions. What kind of YouTuber am I? Anyways, if you're liking the video so far, if you're resonating with anything that I'm saying, make sure to hit the subscribe button. We just passed 100,000 subscribers on this channel, which I'm so pumped about. Got big plans in the future for this channel to keep providing you guys with valuable content. So make sure you hit that button and stay tuned. And while you're at it, I'll leave a link down below for my Instagram accounts. I've got a few business, personal, even music. If you follow me there, I'd really appreciate it. Hit me up, DM me. If I'm not feeling too introverted, maybe we'll chat. Who knows? But don't be shy. Guys, I just pulled into my garage and look what is outside. Crazy timing because I was just talking about this. Well. Let's go inside and unpack this. This is so cool, man. I don't know where to put it. Gotta find a place for it in my office, but beyond grateful. Thank you so much, guys. Now, on to the demonstration that I promised you. I'm going to do a demonstration of compounding. I'm going to set up a simulation with a $10,000 account balance, and I'm going to run a test with my algo through all of 2025. And I think I'll set it up at 2% risk. I think that's a safe amount. Obviously, 1% is safer, but when it comes to personal capital, 2% is extremely conservative. Obviously, if you're trading a prop firm account, you don't want to be using very high risk because they give you such a strict small limitation to actually trade with. But when it comes to personal capital, there's obviously no restrictions, nothing holding you back. So if your system allows for it in terms of your win rate and risk to reward ratio and all of your other statistics, then by all means, you can risk more than 1%. Anywhere between 1 and 5% is good, but 2% is a good, healthy number to stick to. So let me go ahead and set that up and then we'll start the demonstration. All right, the demonstration has commenced. Now let's wait for the results. So as you can see, we're starting at a $10,000 balance. Very minimal, very achievable. Maybe to some of you, it seems like a big balance. Obviously, you don't have to deposit that right away into a personal account, but you could start small and just compound it over time. Now, this is an algo, obviously. The same principles here go for manual trading as well, but this is just an easier way to actually demonstrate my point. So this is running from the beginning of January 2025 all the way to November 30th, 2025. So obviously with the exception of December, because at the time of recording, that has not happened yet. And the EA that I'm using here is a breakout EA. It sets key levels on a daily basis at certain areas in price. This test is currently running on gold on the 1 minute time frame. We also apply this to the Dow Jones and the NASDAQ. Works beautifully on all three, especially all three together. And we see an average of a few trades per day, which is really nice. It's got a very high win rate and I've been absolutely loving it. But the thing is, it takes some time to actually produce results. You can't just be expecting weekly withdrawals or, bi-weekly payouts or something like that. There are some months where it's performing at break even. There are some months where it's going to be losing money. And then there's other months where the results will just go absolutely parabolic and you're going to see tremendous profit being generated. So right now we're at slight drawdown. You can see new orders are being placed and it's going to continue to go up and down. But basically this test is going to take quite some time to play out. So I'm going to check back a few times throughout the test, give you guys some updates, and then we're going to really assess things at the end of this test and hopefully really nail the point home about how to compound your own personal capital into something significant. And that way you can finally stop being a slave to prop firms. You can finally break free and have some real success as a trader. I'm going to play some guitar while I'm waiting for this test to play out. I'll talk to you all soon. All right, so we're only 2 months into this test so far and we're only up 7%. Obviously that's not too impressive. You divide 7 by 2 months, it's 3.5% per month, and a lot of people wouldn't be happy with that. However, in reality, that's phenomenal. But we're just getting started with this demonstration. Okay, so I'm going to check back in maybe halfway through 2025 and I'll show you guys the update then, because 8% now. As this continues to compound at 2% risk without withdrawing any money, these numbers will grow significantly and it's going to really open your eyes. Now, just a little bit of context on the strategy here itself. This EA places 4 orders per day per asset. So 4 key levels, 2 buys and 2 sells every single day. And it's betting on momentum, a breakout of these key levels. And once that breakout occurs, we have a very strict stop loss management system, which allows us to take partial profits and protect ourselves from a full stop loss. So this is only applied to gold right now. As you can see, we also usually apply this to NASDAQ and the Dow Jones, US 30. So when all 3 are applied, the EA places a total of 12 orders per day. Now that doesn't mean 12 trades are taken per day, of course. A lot of these are just pending orders that get deleted at the end of the day because not all of them are met, not all the key levels are hit. But when those key levels are hit with the trailing stop loss system that we have in place, we see tremendous results, especially over time. So we're now up to almost 10% in profit, and we're just heading into the first few days of March, really. So pretty good so far, but I'll check back with you guys about halfway through the year. Well, as you can see, the test is still running, currently about 40% in profit. So that's pretty good considering it's only June 4th at the current time of the test running. So 40% in 6 months, not bad. But it's important to mention that the first 2 months, basically January and February, were just about break even. So those are the periods of time that really test people. But if you just stay the course, then you see the real results and you see your strategy actually play out. So it does take time. It doesn't happen right away. There are many break-even months, boring months, you could say, and there are even some losing months. But overall, if you just leave it and let it do its thing, then it will profit. So there you go, 41% now. I'll check back with you guys at the end of the test, which should be about November 30th, and we'll assess the situation then. Almost done, guys. It's getting there. Trading in the end of September right now, so it's not too far off from November 30th, but look at the balance, guys. It's now at 26,500, started at 10,000, only risking 2% per trade. Now you can also see how much the lot sizes have changed. We started off pretty small, and now because we're compounding and not withdrawing profits, those lot sizes are now increasing significantly, and it's going to keep happening. Probably going to compound significantly more in just the last couple months here because we're already at 26,000. So now instead of 2% of 10,000, it's 2% of 26,000, almost 27,000 now. That's the beauty of compounding. You can just let it go and you can risk the same amount that you were initially risking, but it's now worth more. So obviously if you incur losses, those losses will be larger as well, but the wins obviously make up for that. So as the account grows and your trading history remains consistent, you're going to see that balance grow significantly. Now, this test has been going forever. It is dark outside, as you can see. I started this in the early afternoon and it's now late evening, but I promise I'll make one more update at the end of this test and we'll see what the final balance is. Well, the test is now complete, and this is the total balance that we're left with. So starting at 10,000, now ending just over 46,000. I don't know about you guys, but I think that's pretty substantial in just about 11 months. That's pretty remarkable. I really hope that what you're gaining from this is that you don't need a prop firm to actually gain significant capital. You can start small and compound it over time if you're patient. Now, this balance, And the demonstration that I just showed doesn't even include making regular deposits. This is just an initial starting balance compounded by the profit of a good strategy. Now imagine you added an extra $500 to this balance every single month throughout these 11 months of this test. And then the profit was compounded onto that instead, because the larger the balance is, the more that 2% risk per trade is actually going to yield. So listen, there is opportunity in prop firms. I'm not going to completely bash them. I've made a bunch of money from them. I know a lot of other people who have made significant money from them as well, but there's just a better way to be a trader. You don't have to rely on these firms 100% of the time, and you don't have to put all your mental effort into them. If you do have your heart set on using these prop firms, the least you can do is have a good plan to basically milk them. Get as many payouts as you can and funnel that money into a personal brokerage account that you can do this to. Prop firms are all temporary. They come and go. They change their rules all the time. They are constantly making it harder and harder for profitable traders to succeed. Like, trading is hard enough as it is. You don't need other factors going against you as well. So I really hope this video opened your eyes to different possibilities. That's one of my main goals on this channel, is to just show you guys what's possible. With that being said, I'm going to call it a night. That test took forever, so it's getting pretty late here. I really hope you enjoyed this video. And once again, I want to thank you all for being with me. Thank you for subscribing. Thank you for liking the videos and commenting on them. I appreciate each and every one of you, and I'll talk to you all soon.